Good morning, Elargu Shubhodaya. The theme for this month happens to be growth, which we felt that interpretation on, well, some sort of a financial or money matter based direction would be very helpful because we've not really, dwelled on it much. And I don't know how many of you have either. So it was natural for us to target Zerodha Varsity with whom we have also had a long association now for over a year. So I'd like to give a little introduction about Karthik Rangappa. Other than being a mentor, a friend, a client to us at Teapoy, he is the chief educator at Zerodha Varsity and Zerodha Broking Limited in general. He is the main curator for all their initiatives, which involves spreading of financial literacy or education to various communities across the country, whether it's urban or rural, in person, as well as they have a whole set of, I don't know if you've seen the Varsity YouTube page, but they have all of their financial awareness, videos up on their channel. So we're here to hear more about him, so I'm going to cut my introduction short. With, great joy, I invite today on our platform, Karthik Rangappa, to share.
Thank you so much, Karishma. I'm not really used to this. All my work is behind a laptop, writing articles and writing notes. So not very, this is not something that I do on a regular basis. So if I bore you all, please excuse me. I know it's Sunday morning. It takes an enormous amount of effort to wake up and come here to listen to a finance guy. So I'll try not to bore you all. If you have any questions related to what I'm going to talk about, finance in general, markets, trading, investing, please feel free to interrupt and ask me.
Interrupting.
Okay. Yeah. I think there are a bunch of questions Karishma had shared. So let me. How many of you here trade and invest in the markets regularly? Okay, that's maybe about 5 hands, and that's exactly why we need financial literacy in the country. So so let me start with my journey. I think back in 2006, that's when my curiosity about markets, trading, and investing started. There was no social media. There was this thing called Orkut. I don't know how many of you remember. Yeah. So that was the only thing, and Orkut was not really a place where you could talk about markets and trading and investing. It was more about posting photos, pretty much how it is right now. And there used to be this thing called the testimonial. So if you like somebody, you write a long page testimonial, and that's about it, right? So that was social media back then. So if you had to learn about something, you had to do a really tough thing. Physically meet people, right? Physically meet people at a venue and talk about topics that interest you, like exactly how we are doing today, right? So I was a part of this club in Bangalore, very imaginative name. It was called Bangalore Investors Club, right? So I used to be a part of that club, and we as a group would meet every Wednesday evenings to discuss about stocks, investing, trading, different topics related to markets, and a lot of interesting things were happening in the markets back then, right from the split of Ambani brothers, right? That created a lot of curiosity amongst people like me, because it was being talked about almost every day in mainstream media. And then at the same time, there was derivatives trading. I don't know how many of you are familiar with derivatives, but then that's like the bread and butter for a stockbroking firm like us, right? So derivatives trading was picking off quite rapidly. There was multi-commodity exchange where commodities like gold, silver, crude oil, pepper, coffee, all these things get traded. That started in in Bombay. So multi-commodity exchange was pretty new, and there were hardly any people in Bangalore who were trading commodities. And as a group at Bangalore Investor Club, we decided to pursue a program offered by the MCX, a diploma program in commodities trading, to basically learn about how trading and investing in commodity works. So first day in the class, it was somewhere in Kormangla. First day in the class, first hour, there was this other guy in the classroom, very, super sharp, asking all sorts of right questions, while all of us were trying to figure what gold futures were. This guy in the crowd, who had also enrolled for the program, was asking some really advanced questions. And we all knew, okay, this is the guy we have to hang out with. And that happened to be, any guesses? Yeah, Nitin Kamath, right? So that was Nitin Kamath, who had also enrolled as a student, also pursuing the same program. But it was very clear, dude, you have to hang out with this guy. So, we all became friends. But the problem is, he had only two interests in life: markets and gym. Right? So I also started, working out with him and all that stuff. That didn't really go well. But then we started trading the markets together. We were a small group of people. We would meet every day. Nitin had an office on Banagatta Road. I'm talking about pre-Zerodha days. Sorry, I didn't introduce Zerodha, but I'm assuming people here are familiar with Zerodha, right? So we started trading the markets pretty regularly. As a group, we would meet, and Nitin had a small office, and we would trade all sorts of things on the National Stock Exchange, Bombay Stock Exchange, MCX. It's the same set of people even today at Zerodha, right? 2006, fast forward to 2010 or so, while trading was going on one side, Nitin had other aspirations, right? So he was like, this won't work in the long run. We have to set up some entity, some sort of formal structure to this. We all understand stockbroking, so why not start a stockbroking firm, right? So that was the idea. But then my interest was slightly different, right? More than trading, I wanted to interact with people, manage their monies. Maybe I was very fascinated with all these hedge fund manager movies that I used to watch, and I thought I could become like one of those guys, right? So I told Nitin, boss, you start stockbroking. I will become a fund manager. I will give you clients, and we'll still be in touch. So I branched out, and I started something on my own to manage people's money, right? And at the same time, Zerodha started, and Zerodha, it picked off from day one. So me and my friend, another friend of mine, we started a money management firm where we would take money from people, reassure them that we will make sure that this money grows for you, for you, and we will do all the hard work and give you returns. So that was a fairly for people who would want to take risks, that was a nice way to give away their money and watch it grow. But the problem with that is, we would make money only when the client makes money. So let's say someone's given me 5 lakh rupees to manage. I would charge them a 20% fee on the profits generated. So end of the year, I would go and say, okay, look, your 5 lakhs has become 10 lakhs. I've doubled it. So on that additional 5 lakhs, give me 20%, something like that, right? That means to say, I had to wait 1 full year for me to see money, right? For me and my partner to see money, we had to wait 1 full year. And it was a fairly tough job, right? Because we had bills to pay, we had, our own commitments and all sorts of things. So, which kind of made me realize that I'll have to do something else to complement and generate an income stream. Around the same time, there was also National Stock Exchange in association with Manipal, which started training people in Karnataka, specifically in Karnataka and southern regions, about stock markets, because they somehow didn't see active participation from this part of the country. So they had put out a small advertisement in the paper saying that we are conducting these courses, and please come and attend if you want to learn more about trading and investing. My wife happened to see that newspaper advertisement, and she said, look, they're doing something like this. You're anyway not making money. Why don't you go teach there? At least, you will get you will anyway get a pay for that, and you can continue doing your business. And meanwhile, bills are going to be taken care of. I didn't want to go and teach. I mean, I was supposed to be a fund manager, right? But then anyway, I didn't. I went there. I went to Manipal University on Old Airport Road. Waited outside their office to meet somebody who was responsible for doing this particular course. I think it was almost one full half a day of waiting. It was literally a cold walk-in. End of it, I convinced them that I am the person they should be tying up with to do these workshops across the state, right? And I walked away with that assignment, but I had no clue how I was going to do that, right? Then I started talking to people who came forward to help me structure the program, and who said, okay, I'll also join you to conduct these programs. For next 3 years, all I did, me and my few of my friends, were doing workshops around stock market and spreading financial literacy across the state. I think over close to about 400 odd sessions we conducted, right from Gulbarga to Bangalore to Mysore to all sorts of places, right? Bangalore was the hub, but we traveled everywhere. Now when I think about it, had I not done that, had my wife not seen that paper advertisement, had I not gone out and teach people about stock markets, Zerodha Varsity would have never happened, right? Because that gave me the experience of meeting people, understanding people's behavior towards money, understanding how they treat, what sort of relationship they have with money. And that experience for me was amazing. It helped me unlock a certain thing about people and the relationship with money. But another funny thing is, even today, when I look at Zerodha's business plan, right? Nitin had shared a business plan with us. There was no ChatGPT, so he had literally taken efforts to create a business plan. So it was a 4-page document, all random thoughts. One of the thing was, we will somehow use technology to differentiate ourselves from other existing incumbent stockbrokers. We will also educate people about, we will not advertise, but we will educate people on stock markets, right? So that education was always central to what Zerodha, wanted to do from day one. So 3 years, till about 2012, 2013, I did a lot of these workshops. And then I had a very unique problem, right? So my partner, his name is Prakash, still a very, very good friend of mine. He was from, anybody from Andhra Pradesh here? Okay, don't kill me for this now. Okay, so this guy was from Andhra. He was a bachelor. He was not, and his parents were trying to get him married. Nobody would come forward to marry this guy. Why? Because he was running a business. So his parents gave him a warning. Quit your job, wind up your business, join Infosys or TCS, that's when we'll get you married. So eventually the guy joined Microsoft and he got married. And I was left with no partner. And I didn't have the motivation to continue doing whatever I was doing, because both of us were equal parts in the business. So so this guy got a partner, he got married, he got a job in Infosys. I didn't know what to do. Then one fine day, it just occurred to me that, I can go back to Zerodha. So I went back. Zerodha was 3 years old then. I went back and spoke to Nitin. I was like, this is a perfect fit, and we always wanted to do education. We still want to do education. Why don't you come over? And and look into that piece and see how you can build it. That's roughly how the journey started from 2006 till about 2014, right? So and once varsity started, I don't know, some of you here may be familiar. I guess you would have seen how the initiative has evolved. We'll probably talk more about it as we proceed. But if there are any questions, any thoughts, I'd be happy to take. Otherwise, I can continue, right? Yeah. 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 It's all on Instagram now. No, people don't meet physically, or at least in my world, I think it's all online. So that's why I was pretty excited to come here, because you actually get to meet people. But yeah, it's all online clubs, WhatsApp groups, things like that. So yeah, no, I think this thought has crossed multiple times. Unless you have people like Vishwesh and Karishma who can run the initiative consistently for 11, for so long, it's impossible to maintain a offline initiative. So, but yeah, so maybe something like that. This conversation has come up multiple times, but maybe we'll do something about it. Yeah. So. Okay, why is financial education important for personal growth, and why is it not talked about enough? I'll talk about the second part of the question first. As children, as kids, when I was growing up, I'm pretty sure there's been the same experience with some of you at least. Talking about money, finance has never been a part of mainstream conversations in families, right? It's always hushed topics, as children, we were never exposed to money conversation, right? Whenever topics about money or finance comes, parents get into one corner, they say, they tell the kids, no, don't disturb us. And they have these hushed conversations, right? I think it's never a mainstream dinner table conversation. I think it's cultural. And I think there are cultural barriers around making money topics mainstream conversation, right? And that's why as young people, as teenagers or as young adults, exposure to money is unfortunately extremely low. But then what happens is once the children grow up learning, physics, chemistry, maths, bio, or whatever, they work really hard to secure a job and eventually get a job in one of those fancy places, and they start earning, right? So their metric of success is, I've worked hard, I've studied, I've got good grades, now I've got a job, I'm getting X amount of money as salary, so I am a very successful person. But once that money hits the account, most of them are clueless on what to do, to an extent where all these guys live paycheck to paycheck, right? I have friends who are late 30s and don't even have any money as savings, right? And if you think about it, why is this the case? It all goes back to the conversations you as a family would have had on dinner tables, right? So that is a problem. So unless that cultural context changes, I think this money problem will exist, right? So yeah. How does India fare in being financially literate? This is a question that is right now bugging me pretty much every day, because there are no definitive answers. I was looking up a survey by National Center for Financial Education, backed by RBI, and they put a percentage, 27.7% of Indians are financially literate. That's the number. But unfortunately, there are no further data points to this, right? How many of them are from northern India? How many of them are in rural India? What is the demographic split? What is the gender parity here? What is the urban split versus the rural split? What are the if financial literacy is higher in a certain region, Why is it so? None of those data points are available. So in fact, I was telling Soumya, right? Yeah. So in fact, I was telling Soumya that she's from Takshashila, right below, into public policy and all that. So I was just telling her that there are no definitive answers to these questions, and we as an organization, that is Zerodha as an organization, would love to do a pan-India exhaustive survey to get all these data points, right? So this is on my mind, especially for the last 2-3 weeks. I've been thinking about this every day. Hopefully, if at all we meet again, I should be in a position to give you very specific answers around this. So this is a project that we are taking up as actively over the next maybe 3-4 months, and do a pan-India survey to get numbers around this. In fact, a nice video on this will be good. So I'll talk to you about it later. So yeah. Why and how was financial education arm of Zerodha born? I think I did tell you all how it was born. Education was always a core part of Zerodha's agenda. I mean, you would be surprised to know that pretty much all of us spend at least an hour every day, even today. When I say all of us, I'm including Nitin also, answering people's queries, right? Nitin does it very religiously on this forum called Trading Q&A. I do it on Varsity, and a bunch of us on different portals where we interact with customers. And most of the customer queries are around topics around trading and investing, helping them understand how they can make better money choices. So we spend at least 45 minutes to an hour answering our customer queries. Actually, customer is not the right metric, not the right word, because we don't even validate whether they are our customers or not, right? Anybody with an interest to learn and understand finance can post their questions. We don't even check who they are, where they are coming from. Most of the time they would be trading with one of our competitions, but it's okay. As long as there is a question and as long as we can post a response to it, we are happy to do that. So it's a very central part of Zerodha's existence, right? So yeah, but I gave you a background into how the initiative started. But just to reiterate, this is something we do and put enormous amount of efforts on a daily basis, right? And it's ongoing. How has personal growth of finance and management evolved over 2 to 3 generations? So my parents, I'm sure this all of you would know. My parents, they're in their 80s, right? For them, finance was all about FDs and real estate, right? If they were slightly better off, they would probably invest in sites, not even apartments, and park bulk of their money in FDs. Why do you think that happened? I'm sure all of your parents, older generation, they would invest in FDs, right? Stocks and all was way above the league. It was just fixed deposits, right? I remember seeing my parents having a file full of FD certificates, right? 5,000 rupees there, 10,000 rupees in another bank. So they would have a small file with all their FD certificates stacked. Any idea? I keep thinking about this. Why did yeah, please. Yeah, so trading was, opening an account, all those things were tough. Yeah.
The rate of interest back then was higher and the rate of inflation was much lower.
Yeah, which also means stock returns were also higher, but that was never perceived as a avenue for investment. Yeah.
I think it's because the perception was that like mutual funds are a safer option as opposed to investing in stock market, and they had a very scarcity mindset, which meant that they would want to invest their money in a safe option.
Yeah.
See, hammer is the only tool available. You can perceive every problem as a way.
Yeah.
So FD was the only thing that was available to people in the rural, urban, the real estate actually became popular after
Okay. I have my theory, I'll share it in a bit, but let me hear more answers. Yeah. Secure, okay. Understood, yeah.
Banks use this thing called guarantee. You are like guaranteed so much return, and that gives people an idea that hey, if I put this money, I can have an expectation I'm going to get back this much. And I'm pretty sure banks back then would have even advocated very heavily for them to get more money
Yeah,
to people
yeah.
so that they can use it for them.
Yeah.
The tangible assets. Land is seen and perceived. Gold is also seen
Yeah,
and perceived.
yeah.
So they're tangible and equate to real life value.
Absolutely. Okay. More answers, yeah. Yeah.
But even now, when I speak to some of the people like, why don't you invest? They say, I do not understand, I do not get this.
Yeah, that's a problem even today actually. Yeah.
I think it's also the fact that you generally have a relationship with the bank already. So distribution is, you don't have to put additional effort to distribute because
Yeah.
you have a banking relationship and then you say these are the other instruments versus everything else you have to go and
Yeah.
get that, which is maybe harder.
Yeah.
From what I have seen, they didn't like the uncertainty. They
Yeah.
slept better knowing that it's going to grow, it's not going to go
Yeah.
down.
Yeah, so I think I'll agree with all of you. Everyone who answered, I think all the perspectives are correct. But to put it in a very crude manner, FDs were popular because my parents' generation, they would seek the advice from a bank manager on what to do with their money. And the bank manager would always advocate FDs. Spillover, maybe gold or real estate. Gold was a default option even for generations because gold has always been perceived as a safe haven. But I don't remember my parents seeking financial advice from anyone outside a bank manager. Anything to do with money, they would go to the bank manager. And the bank manager had only one medicine, FD. Right? So think about it at scale, pan-India. So that entire generation grew up to be the fixed deposit kind of a generation. In my generation, I was born in the late 70s. When I started earning, and I can speak pretty much for all my batchmate, my peers. If we all knew FD was a thing that we had to do because we had seen our parents do that. In fact, in my own situation, there used to be a bank right outside my house, 20 steps away. There was a corporation bank, and I remember running up to that bank every other week, either to put some certificate, collect some check, or whatever. So so right from my early days, I knew saving is something that I have to do when it's my time to make financial decisions. But I think in my generation, people were slightly okay to take some risk, right? And we started discovering stocks, we started discovering mutual funds and financial instruments apart from fixed deposits. We were okay to do that, right? And by then, things had progressed. There was a lot of digitization. You could open, I still remember 2005 when I opened my first trading and demat account, it needed 40 signatures, right? And this was the case till Aadhaar came into the country, right? Once Aadhaar was there, online account opening became easy, and today you don't even need one wet signature to open a trading and demat account. But back in the day, even when Zerodha started, we were sending out physical forms and people would put 40 signatures, and across the sheet, left, right, center, all sorts of places you have to sign. And but that also eased up, and I think this entire generation opened up to saving in stocks, mutual funds, and people like Zerodha made it easier to invest and trade in the markets, right? So that's probably my generation. The younger generation, where do you think they're getting their advice from? Instagram, right? So Instagram Reels. So ChatGPT also. So they are more. So one thing that has happened throughout, is the perception of risk has improved. I don't know if improve is the right word, but risk-taking ability has expanded, right? My parents would never go beyond, FDs. In fact, I remember convincing my father to invest in mutual funds after he retired, right? So I was like, it's okay, put money, nothing will happen. I'm there, I'll take care and all those things. But luckily it worked. But yeah, so I think the younger generation, you don't even have to talk to them about risk. Even before you utter risk, they would have invested in a crypto. So the risk-taking ability has greatly expanded, right? And but at the same time, the bigger problem is advice is coming from unverified sources. People who are good at making reels and TikTok videos are now perceived as financial experts, right? So all you need to do is talk about a crypto or a meme coin or a meme stock or whatever very confidently with great trending music, and you are a financial expert, right? So unfortunately, that is a big problem, and that needs to be tackled, right? I'm sure regulators are very actively tracking that. In fact, last week, I met a regulator from UAE, right? He was the regulator for the stock markets in UAE, and the biggest concern for them is about the reels and TikTok videos basis which the citizens of UAE are investing, right? So governments are actively taking note of this and actively trying to do something about unregulated financial advice. So that is the biggest problem in the current generation of investors, right? So they are taking advice from the wrong places. But the good thing is that risk-taking capacity has expanded, right? Yeah.
I mean, for those of us with full-time jobs, financial obligations, or family, is it really responsible for us to enter the market considering the risk that's involved?
It depends in what capacity. If you're investing for the longer term, which you should, then it's absolutely okay. But if you're day trading or scalping the markets where you've put in a position and you're tracking it through the day, which in turn affects your work, then that's not the right thing to do. So it all depends on what trading you're doing and how you define trading for yourself. Right, so definitely not day trading and high frequency trading, because that's, I mean, I've seen this over 20 years and it's very, very hard to solve and hard to do. Also extremely addictive, right? So I wouldn't encourage anyone to do that. But if you're investing for the long term with a very specific agenda, then that's the right thing to do. And in fact, you should be doing that. Yeah. Yeah.
Don't you think the retail investors always had a disadvantage when it comes to information about the capital stock? But let's talk long term, not trading. Compared to, say, others who are like very institutional or bigger investors who are more seen in the game. So, is there enough predictability for a retail investor?
You said long term, right? Yeah, so when it comes to long term, I think every one of us are on the same plane, right? Whether it's a big hedge fund or a large domestic institution or a retail investor, we are all on the same plane. It is all about how we perceive public information, the story about a stock and how much we believe in it, how much we want to invest. In fact, I think retail has an advantage because retail can also invest in small stocks which has little liquidity. There are many times where an institution would want exposure in a small stock, but just because it's not liquid enough, they can't really invest in that, right? So they let go. So from that perspective, retail has an advantage. Where retail doesn't have an advantage is in high frequency trades. Day trading and high frequency. I mean, if there is any retailer today wanting to do a high frequency trading, that I think is outright stupid idea, because there is no way you can compete against an institution, Because in high frequency trading, what really matters is latency and speed at which you can compute and execute a trade. As a retailer, you will always be at a disadvantage simply because of the availability of capital, which an institution has abundant, right? You can't compete in terms of setting up, computing power, speed at which you get the data, all those things. So if you are venturing in that territory, then clearly that's a disadvantage, but not in long-term investing.
How do you define financial literacy? Someone asks, are you financially literate?
Yeah.
I don't have an answer.
Yeah. So financial literacy can mean different things for different people, but bare minimum financial literacy is: do you understand what inflation is? Do you understand how inflation can affect your life, right? Financial life. Do you understand what compounding is? Do you understand how interest works? These are simple things that defines. If you can answer these questions and also put out your financial planning around these concepts, then that's more than sufficient for an individual, right? Beyond this, there are varying degree of financial literacy and financial knowledge. Do you know how to pick a stock? That's a completely different territory of financial literacy. Not necessarily everybody should know. Do you know how to trade futures? Do you know how to trade options? Can you set up an option strategy? Do you know what a bull call spread is? All these things are plus, right? So it's good to know if you have the time and capital to play. I don't like to use the word play around, but for convenience, right? So it's good to know if you want to play around. But otherwise, for a normal individual, these things around inflation, interest, and compounding is more than sufficient. So if you can answer questions around that, then I would consider you financially literate. Yeah.
The same way that there was a dot-com bubble, there are talks of how there is an AI bubble and it's about to pop at any given point in time. How do you see this playing out? How do you see this impacting the markets?
The AI bubble? Yeah. I mean, right now I'm still in the stage of getting mind blown, because every day, yesterday my 10-year-old daughter was ChatGPTing to complete her story, right? So every day I'm still mind blown with what humans can do with AI. So I can't foresee this, how this bubble is going to break and play out. But from whatever conversations I've been hearing, I think AI and AI-related stocks are already factoring in this bubble, and in terms of price. Shameless plug, just yesterday we released a video on AI versus IT, so please do go watch. It's on YouTube. It's a deep dive into how Indian IT sector evolves in the backdrop of AI and all that. So my colleagues have put in a lot of work. So please, yeah, sorry. Yeah.
So what's the story behind like a lot of rural areas that you covered with financial literacy? Has the credit history become stronger for, say, women entrepreneurs to go get a loan and access to banks? Because I do know that an education loan still becomes tricky even for an urban kid to kind of access. So what's playing out there?
So you're asking about credit offtake for rural women?
Yeah. There's financial literacy that's better.
Yeah. So we did some initiatives for rural women. I think Karishma and Vishwesh helped us document that as well. One thing that I've noticed is financial literacy is not like how you would do financial literacy in an urban setup. In an urban setup, let's say I go meet a bunch of people. I can talk about concepts. I can demonstrate few things. I can explain in a very practical way what is the advantage of compounding, how you should look at it, etc., and walk away from the workshop with an assumption that people have understood. But in a rural setup, it's completely different. The commitment should be long-term. You can't just do a workshop and walk away from it. You should establish support systems for people there. Continuous monitoring is required, and you need to constantly have those interventions to figure whatever financial literacy has been taught has actually reached the way it's supposed to. I've seen, you spoke about credit, right? I've seen women entrepreneurs especially. I think the support system is very, very crucial. They have all these self-help groups for women, Sangha, they call it in Kannada, right? So they, as a group, they take on credit from banks, and the banks are very happy to lend to the Sangha as opposed to an individual person. So that support system there is really good, and especially strong SHGs, right? So through that, I think there is some amount of credit flowing in through these women entrepreneurs. Yeah. Okay. What are some basic practices that can help start a journey in money management? A lot of people think that money management or personal finance journey is very complicated, but it's not. It's not rocket science. It's extremely simple stuff, and you don't need to do anything beyond this, right? I usually talk about a 4-step process. Step number 1 is to figure out if you have an emergency fund, right? Now, if you pick up any Western textbook, it'll say that you need to have 6 months of your expenses saved as an emergency fund. Unfortunately, I don't subscribe to it because each family is different. My family circumstances are very different. My expenses are very different compared to yours, right? So the best thing to do is to sit with your family people, your spouse, parents, whoever, figure out what is the expenses that needs to be saved as an emergency fund. It could be 6 months, it could be 8 months, it could be 10 months. For each of us, it could be different. But the idea of an emergency fund is, you need to stash away some money that gives you that sense of safety, right? Whatever gives you that sense of safety is the right amount, right? So you can't really put a formula to this. 2 plus 2 equal to 4 works in math, but not in personal finance. That's why it's called personal finance in the first place, right? So it differs for each family. So you really have to sit with your family members and figure what works, right? So step number 1 in your personal finance journey is to ensure that you have adequate money saved as emergency fund. Now the thing is, once you save that money, let's say for sake of this conversation, 5 lakhs is that money you want to save as emergency fund. Now the question is, where do you save that? One mistake that I've seen people make, they accumulate this money, the next day they'll go and buy some stock, they'll go and buy some options, right? That's not the right thing to do, because this money is supposed to be your emergency fund. It's supposed to be kept in a place which is accessible at all the time, right? Simple things like FD or a savings bank account is a great way to save your emergency money, and not in a stock or a portfolio of stocks, right? Because that's volatile in nature. You don't want your emergency money to be in a volatile place. So accumulating that emergency fund and saving it in the right way is step number 1. It's the foundational building block of your personal finance journey. Once you've sorted that, look at insurance, right? I think all of you know there are 2 types of insurance. One is the health insurance, the other one is the term insurance, right? So make sure you have both these insurance sorted out. Talk to a good insurance agent. I usually don't like financial intermediaries, but when it comes to insurance, I think it is important to, yeah?
So that is exactly where your literacy works, sir.
Yeah.
For 20 years, they made me buy ULIPs. So I think term insurance is something I bought 5 years back.
Yeah. So please talk to a good insurance agent. Figure out what is the right amount of term insurance you need. Don't blindly subscribe to the insurance plan that says insurance till 99 years. That's a waste of money. So don't do things like that. Don't mix investment and insurance, like he rightly mentioned. Treat them as separate, right? Insurance is an expense. It's a yearly expense. Write off that money and don't expect it to give you a return, right? So that's the most common mistake most Indians do. That is to mix insurance and investments. Don't do that. So figure out what is the right health insurance, term insurance for you, and you need term insurance till the time you're earning, right? Once you retire, you don't need a term insurance, right? What is a term insurance for? Term insurance is basically to ensure, in case something happens to you and you're no longer there, the income that you're supposed to be earning is offset by the insurance amount that will come to your loved ones, right? So, and that income stops after you retire. So there is no point having a term insurance for 99 years. You're not going to earn or work for 99 years. So up until your retirement age, get a term insurance. Don't mix insurance and investment. I've said that earlier also. Get a health insurance. Health insurance is supremely important. Right now, medical inflation in the country is at what percent? Any idea?
15%.
Yeah, 14 to 15%, and it's one of the highest components in the insurance basket. In the inflation basket that is rising faster and faster. Medical expenses are going to be steep. Please get a health insurance for yourself. I don't know how many of you follow Nitin on Twitter, but he had put up a post saying that most Indians are one health incident away from bankruptcy, right? So, and that is enormously true. It has a lot of weight in that. So that's why that tweet that he put out made a lot of sense. And please get a health insurance. And when you get a health insurance, it is not just for yourself or for your immediate family. You need to ensure all your dependents are also covered under that, because your dependents, end of the day, are your responsibility, right? If you have senior citizens in the house, please ensure they are covered too, right? So please get a health insurance. Moment you do these two things, that is build an emergency fund, get a health insurance, get a term insurance, trust me, you are at least 80% better than most of the people in India when it comes to personal finance, right? And please note, I've not even spoken about savings yet, right? Just these three things, very basic stuff. Most people don't do it, right? So please do these three things. These are foundational blocks of your personal finance journey. The fourth thing is managing debt, right? Unfortunately, a lot of people fall, victims of easy loans. It has ruined many people's life. People don't understand how interest rate works. That's why when you were asking what is financial literacy, understanding interest is financial literacy, because this affects you on a daily basis. You see something on Amazon, you see something on Flipkart, you press two buttons, an easy loan is given to you, you buy today, pay later. You don't even realize that your credit score is getting messed up, right? When you do that. And that's an important factor for your personal finance journey. So please be aware of how interest rate works. Please be aware of how much loan you can take. Please be aware of what an EMI is and how it can mess up your life. So people, just because loans are easily available, people have EMI stacking, right? They build up they have so many EMIs to pay without realizing that they can't really afford paying so many EMIs. So please be aware of that. Manage your debt in a reasonable way. I'm not saying debt is bad, but you need to understand what is the amount of debt you can take on as an individual, right? I'll give you a very simple example. Let's say your income is 1 lakh per month, and you have your rent, you have your expenses, utilities, etc., and some savings. We'll get to savings in a bit. Let's say post all that, you're left with 40,000. right? Now 40,000 is the amount you have as buffer. You may want to keep about 10, 15,000 or 20,000 as cash buffer in a savings bank or whatever. 20,000 is what you're left with. For 20,000 is the amount you can pay as EMI and still lead your life normally, right? What does that mean? If you backwork, there are multiple EMI calculators. That means to say maybe you can take 5 lakh loan at 10% interest rate for 5 years. I'm just randomly making this up just to give you an idea. But that's the way you need to think about debt, right? So beyond 5 lakhs, you cannot afford more loan. So find out what that free capital is and then backwork and figure out how much debt you can take. Don't randomly take on debt. It can ruin lives, right? I've seen it happen, play out multiple times. So managing debt. So this is the other building block. We spoke about emergency fund, we spoke about insurance, term insurance, health insurance, and an attitude towards debt. These are supremely important foundational blocks of personal finance. Now comes savings. We all need to save money. Why do we need to save money? Because we all have financial aspirations, we all have financial goals in life. A lot of people, especially the younger ones, think that they don't have any financial goal. But what they don't realize is all of us have one common financial goal, that is to save for retirement, right? So whether you know or you don't know, we have to save enough money for retirement. So at least start saving for that one goal, right? So and savings need not be very complicated. You can pick up any mutual fund. I would suggest an index fund from any decent asset management company. Could be Kotak, could be SBI, whatever you are comfortable with. Start saving some money in that fund, right? So build a fund for your retirement at least, right? So just doing these things will set you on a great financial, personal finance trajectory, and that's all you need to do, nothing more, right? Is working, right? Yeah. So you don't have to do anything more. One hygiene check that you need to ensure that all your accounts, all your bank accounts, mutual fund accounts, demat accounts, they all have nominees, because I think at least 67,000 crores in India is unclaimed money in bank accounts and saving instruments, which is not claimed for. The person would have, passed on, but because of lack of nominee, the money is not transmitted back to its true beneficiary. So ensure all those hygiene checks are in place, right? But just doing these things, you are largely on a very good financial trajectory, personal finance trajectory, and you don't have to do anything more. Any questions around this? Yeah?
So what would be a good age to, of course, I think earlier the better.
Yeah, I think you answered it yourself. Starting it early is recommended. I think sooner the better. You need to, there are no two ways about it. The only luxury market offers is time, right? So, and if you want more of that luxury, you have to start more early. End of story. There are no two ways about it. But having said that, I understand different people come from different backgrounds. Savings could, kick in later, but that's okay. Moment you have that realization, firstly, I hope people have that realization sooner. But moment you have that realization, that is the right day to start. In my own circumstance, I think 2006 is when I knew the importance of savings. I even started a small SIP, very, very tiny SIP. But I think 2006 I was what, my God, it was very long back. I don't know, maybe late 20s or something like that. But till about 35, 36, I never really started on a serious savings journey. But what I did was 2006 when I started an SIP, it was a very small amount, I think 2,000 rupees or something like that. But I did continue that for a very long time. Although the money was not significant, it inculcated a habit in me that, okay, every month, no matter what happens, I have to save. That inculcating and nurturing that habit is super important, right? So you need, so when there was time when I could save larger amounts, I didn't even think twice, because I had done it with smaller amounts and I'd seen market cycles with that, and I developed the courage to save regularly, right? So I think starting as early as possible has many advantages.
Starting as early as possible is great, but should we, as a thumb rule, is it better to just continue blindly invested in pursuit of the long-term profits? Because every now and then, let's say, I'm saying now and then, not like few months, I'm talking about 3 years, 5 years, you feel like, oh, I probably should have cashed out.
Yeah, I mean, I've been feeling that since I don't know for how long, but I'm glad I've stayed put, right? No, I know there can be very hot debates on this. I mean, 2008 I could have cashed out. I could have cashed out 2013. I could have cashed out 2016. I could have cashed out 2020, right? So it really depends on how you insulate yourself from all these things. For me, because I see this day in and day out, I've kind of become immune to market movements. It doesn't affect me at all, right? So whether my portfolio is down 10%, 20%, 15%, yeah, it feels bad, but then I just move on. So, but for many people, it bothers them a lot. It gives them sleepless nights. So I think that's a personality thing. So you'll have to work around. But I will hold on to assets and investments for a long time. So, yeah.
Have you ever cashed out of equity and invested in a different class, like gold or real estate or something else?
No, I do have exposure to real estate, but that is, I don't consider it as an investment. It's a house that we are building. It's more for the family. It's more for us to live there. I'm not looking at it as a financial exposure. It is for the family. It is for us to live there. So all 100% of my savings is in equity. So but that is not the right thing to do. I would like to add the disclaimer. It is because I am super comfortable with equity. I'm super comfortable with market volatility. Even if my portfolio goes down 20%, I can peacefully sleep. But this is not the case with many people, right? And it is natural. So please have a diversified portfolio. Yeah.
And so far we've been discussing savings and more investments. In the context of, say, my generation, there's a lot of how do you optimize your expenses with like the most diverse and the best credit cards and things like that. Would you be able to share some thoughts on how we should think of that?
Diverse into credit cards?
As in get different credit cards for different kinds of expenses.
Oh, credit card hacks.
Yeah.
Yeah, actually, credit card hack is not a bad thing. I use it. I'll tell you. I think few years ago we went to Sri Lanka, and I was pretty mind blown that I could buy the tickets based on my credit card points. Right. So I was like, now I'm accumulating points. So it's not a bad thing because it gives you that cheap thrill, joy. So it's fine to do that. So, but I've not actively figured how to play around those hacks and maximize for points. I don't know that. It just happens with me because I think a few years ago, I think 2 years ago, I met this gentleman. He was the head of HDFC credit card company. So HDFC has a lot of interesting cards. And so I asked him the same question. So what do you do? What is your advice? He's like, even when I buy biscuit packet, I use my credit card. So since then, I also use credit cards for all sorts of expenses. But I make it a point to repay. I feel very uncomfortable when I have an outstanding, right? So I repay back my credit card bill way before the grace period ends. But I know points are getting accumulated. I never track it. But whenever we go out on a family trip or whatever, I try to see if I can cash in on that just because of that thrill. Yeah.
So the demat account nominations that you spoke about, right? So I do hear that. I've not really tested it myself, but what I gather is a demat account allows you to, skip the nomination while you're creating the account. It doesn't make it mandatory. So a person actually doesn't loop back into that system to complete that process. So is that something that's fixed? Is that something that is...
I think now there is an active push by the regulators also to ensure nomination is in place. I'm not sure about other brokers, but we take in active steps to ensure nomination is in place. But this I need to check what practice we do. Maybe I'll figure and...
Coming back to things, I mean, generally...
Yeah. No, I think now nomination is given a lot more importance, not like before.
And even on the health insurance front, my own experience of being in the people function has been that people think organizations give you health insurance, which is right, but then that's a tenure that you're there.
Correct.
So you don't really invest in buying a personal health insurance.
Correct. Yeah.
And then you're losing out on your age. Like
Correct.
I said,
Yeah.
you start early, your premium is much lesser. So that I feel a lot of people fail to think about it early and then...
No, that's applicable to me also. I've been complacent in that sense. My health insurance, I have aged parents. I keep tapping into that insurance quite often. And it's company provided, and we have a very good health insurance policy. So I'm kind of spoilt there. So, but this is something that I need to do for myself, to get a health insurance outside the company provided one. So guilty as charged. Yeah.
For those who have ESOPs, you recommend we hold on to them as long as possible?
ESOPs?
Yeah, in like tech companies.
Yeah, it depends on how well you trust your boss. Right? So if you trust your boss and if you trust your company to do well, then hold on to it. So, sorry? See, I'm not really a tech person to give you this advice, but I've seen things change rapidly in tech world, right? So whatever your tech that you're working on, there is a high possibility it can become obsolete next week, right? So you're a better judge of that. So you know your domain, you would know your company's, whatever they're doing. So if you understand your industry well, and if you understand how your company is positioned in that industry, and if you believe that story, then you should hold on to ESOPs, because ESOPs is one way where you can get asymmetric returns in your life, and it's a one-time event. So if you have ESOPs in a good company that you believe in and a good sector that it is in, then try to maximize on it. So it all depends on how you assess your position.
So I was just wondering about, what do you think of real estate as an investment option, be it commercial or residential?
Yeah. So my problem with real estate is, if it is a stock, I can analyze that stock from different perspectives. I can look at the balance sheet. I can look at the cash flow, P&L, all sorts of statements. I can read about the management, what the management has to say. And what I'm trying to say is there are definitive points through which I can analyze a stock. Real estate is very difficult for me, right? One person says this piece of land is valued at 20,000 square feet. Then another person says, no, this is easy 25,000. And the other person is, I know somebody who can give you for 18,000. Right? So how do you get a sense of fair value of the property, right? That is problem number one. Problem number two is, I can buy 100 shares for 25,000 today. I can't buy fractional units of real estate. So accessibility is a big problem for real estate, right? With REITs? Yeah. So I understand. I'm assuming she's talking about the classic real estate and not the financial instrument. Yeah, so all these are problems with me, and end of the day, uh, mm, people do invest in apartments as real estate, uh, as an exposure to real estate. While some of them have done very well, I also have friends who are stuck with apartment investments, which has not moved as they anticipated. So I'm sure there is a way to analyze this. It's just that I'm not competent enough to comment on it. So, but REITs is a different ball game altogether. So, yeah, sorry. Yeah, yeah. What she's asking me is about there is fundamental analysis and there is technical analysis. Now, these two techniques allow you to develop a point of view on a stock, right? What is a point of view on a stock? Whether the stock is going to go up, going to go down, whether it will stay flat, right? So, if you can independently develop a point of view, then you can act on it. If the stock is going to go up, then you can be a buyer. If the stock is going to go down, you can be a short seller, or you can sell from your portfolio or whatever, right? The important thing is to develop this point of view, and there are two primary ways of developing this point of view in the market. One is the fundamental analysis, where I will look at the balance sheet, cash flow, P&L, look at what the management has to say, and develop a point of view. This is the classic Warren Buffett style of investing. The other technique is to simply look at the price chart of a stock. You look at how the stock price is moving, make an analysis on the volume price action, and then infer saying that the stock has gone up X%, it's supposed to revert to mean, therefore let me be a seller in the stock. That also helps you develop a point of view, and that's called technical analysis. So most of the people in stock markets choose one of the two methods and develop a point of view. My view, I think it is good to know both and make a mix and match of both these techniques. Yeah.
What are your thoughts on periodic rebalancing as a practice?
That depends on how invested you are in your portfolio. If let's say you have a 60-40 split, 60% equity, 40% debt. Just for others, what rebalancing means is, let's say I have 1 lakh rupee invested in the stock market. I put 60,000 in a equity mutual fund, 40,000 rupee in a debt mutual fund, and I always want to maintain the 60-40 ratio. Now, stock markets do very well. The equity part becomes much larger. Then rebalancing means I sell the portion which is over and above 60%, put that in the other asset, right? This is good to do if you're very strict and you want that ratio to be maintained all the time. But if you are early in your career and if you are okay with the overexposure to equity, that's absolutely fine. But later in your career, closer to your retirement, when capital preservation becomes important, then it's important to ensure whatever rebalancing ratios you have in mind is adhered to. Yeah?
In your experience, what are some conversations that couples who have handled money well have had? Should you be having, say, conversations about money before you get married?
I'll tell you what doesn't work. Both of you can't be spenders. Right? If both of you are spenders, then both of you need financial counseling. One of you can be a spender, one of you has to be a saver. This is something that you need to figure out, right? And I'll tell you one experiment a couple friend of mine did. So the husband was a spender, wife was the saver, right? And this guy was obsessed with buying sneakers, right? So he would buy all sorts of sneakers, and it became an addiction for him. He actually built a small cupboard to showcase all his sneakers. So that was the situation. So what they decided is they'll switch roles, and wife becomes a spender, husband has to be the saver for 3 months. And actually that worked for them, and his sneaker addiction actually came down. and both of them started thinking through savings, and it was a more balanced, outcome that they achieved. But that was them. They're always experimenting. They're open to suggestions and things like that. But honestly, I think one of them has to be a saver, and for women especially. A few weeks ago, we had this session in office where we spoke about money and relationship with money with all my female colleagues in the office. And one of them asked me that, she is scared to talk about finances with her husband. And because husband always has this upper hand in terms of deciding where to invest. So that fear should not be there. I think money and its relationship in a marriage is a equal part thing. And I think decisions should be, equally, both of them should contribute equally in decision making. So if one person has an upper hand, that's a problem. So make sure it's an equal partnership. Yeah.
Like you had mentioned, it's better to start earlier. But 95% of the people I talk to discourage me from investing. They're like, invest in life experiences. They will, like, end of the month, if I have an X amount, now I'm in dilemma, like, should I travel or should I put it? I want to put it in stock.
I'm tempted to say change your friends, but I won't say that. Yeah, no, I mean, it's a very nice, romantic statement to say that, invest in life experience. You should. I'm not denying that, but come on, if 10 years down the lane, when you're looking at an empty bank account, you're going to curse those friends, right? So don't be in that state. The best thing to do is to balance both. Don't be that Instagram wanderlust, kind of person. I mean, if you have all the resources, sure, you can be, but if you're confused as to save or to life experience, then that means to say, yeah, please save. So don't get carried away with those statements your friends are making. Yeah.
What's the take on that being feasible or being done in the Indian countries?
So I think what people don't realize about Western countries is the fact that they have extremely good public support systems, right? Right from pothole-free road, which means to say you can be a wanderlust without worrying about potholes cracking your back, to extremely good school network for your kids, extremely good hospital healthcare systems, right? So all those things are there, right? So FIRE also has those associated aspects which is absolutely lacking in India, right? So today while coming here, I was telling my daughter that government has done an extremely good job by fixing 3 potholes near my house. So we are unfortunately happy with those small little things. So don't. So FIRE also has those aspects which needs to be taken care of. It's okay. I mean, see, if you let me quickly share what that FIRE movement really is. So the idea is, whatever your expenses are, if you can save yearly expense, if you can save 33x or 35x of that, keep it in a financial instrument which is growing at, let's say, 6%, 7%, and then you keep drawing 3% or 4% of that as your yearly expense, then technically you can be retired and go on perpetually, because on one end your entire corpus is growing at 6-7%, the other end you're drawing 3% from that corpus. So you net you have the corpus intact plus it's growing, then it's also giving you a certain amount of income every year to sustain your FIRE life. That's the broad principle. But one health insurance event, lot of things will change. So please factor in all those things also. Yeah.
So most of our financial decisions are very emotionally or psychologically driven, and I feel like if you start early, you're not emotionally mature to make that. So do you suggest that, like on our personal growth journey, it's better to seek out experts and put money to experts who know what they're doing?
No, it's you see, this is a problem in urban India. Uh, we don't value good advice, right? And we don't want to pay for it. Indians, SEBI has this clause of, this category of market participant called RIAs, Registered Investment Advisors. Basically, these are licensed people who can give out investment advice to individuals. Now, the biggest problem with RIAs in India is they don't find paying customers because financial advice is freely available on Instagram. Why would you want to pay an expert, right? So that is a problem in India. But my suggestion is, if you ever come across a good financial advisor who can really help you make good decisions, pay for that, because that takes away a lot of your confusion, frees up your bandwidth, and puts you on the right track. So please value that advice. But the tricky part is, how do you find good advisors? I think a little bit of Googling or searching on the web will lead you to those sources.
What is your take on lab-grown gold? Do you think it will affect intrinsic asset value?
Lab-grown gold, like the way lab-grown diamonds are?
Yeah, there was this company called Marathon Fusion or something.
Correct, yeah. I was actually checking how diamond prices, there is something called as a diamond index, right, has moved after the genesis of lab-grown diamonds. I think there's still a market for those Ganjam jewelers kind of diamonds, right? So will it happen with gold? In India, gold is a very emotional product, right? Try convincing your mother to buy a lab-grown gold. You will find your answer, right? Yeah.
I was also reading on the topic of gold that Indian women own like 11% of all of the gold that exists in the world. That's interesting.
Yeah. So I think the true value of that goes into some trillions or whatever, right? So it is true. A lot of gold is held by. Actually, I don't know why they say Indian women. It's both Indian women and men. So men are also equally fascinated with gold. So, but I don't know why it's always the women's name that's associated. Yeah.
Sir, for section of people, let's say CC B and C people, and specifically those who are already parking a little bit of amount every month in chit funds, etc. Would you say that there should be investment options available for them, let's say mutual funds, etc., or should they be de-risked and not exposed to the market?
See, mutual funds is a wonderful product, actually. It's a wealth creating product, right? So these segmentations, I don't understand. Is it because, end of the day, everyone wants wealth. There is no segment of society that says, I don't want to create wealth, right? So I think everyone should be exposed to it. The only problem is the lower section of the society, convincing them about risk in a way they can understand. And today if a person's working in IT, I can say, or whatever industry, well placed, I can talk to that person and say, look, boss, you invest 5 lakhs in mutual funds and forget about it for next 10 years. The person will understand, right? But you can't have the same narrative for lower income groups, because that is a very important, accessibility to that fund is a very important aspect to them. So you will have to suggest a suitable product within mutual fund universe only. But end of the day, I think everybody should have access to some wealth creating tools.
So are there any initiatives to inform them, or are there options available for this class?
There are initiatives, NGOs that are working towards helping people understand this and helping them understand the risks and the reward aspects of of mutual funds and general wealth creating instrument, but it's a very slow process. So, but there are initiatives that have taken off in India. Yeah.
So when you look at the developed countries like US, there was a recent metric that said about the majority of the population is invested in the stock market.
Yeah.
So what do you think if the market in India were also to grow to such an extent that majority of the population is invested in stock markets and the availability of all of these data points? What do you see the...
Yeah, I think the problem with all these things is we start off with the narrative saying India is 144 crore people, it's a very big market and all that, right? But the truth is, while that's the population, what you need to look at is how many of them file taxes, because that's the true market size. So the moment you input that metric, you're shrinking your population to 1/10 of it, right? And that's the true size of Indian market for all financial instruments. So you'll have to look at it from that lens.
What's your take on buying unlisted shares, OYO or NCDEX or anything?
Yeah, I recently did an unlisted share transaction just to experience what it is, because everyone were talking about it. It's a pain, right? So it's an absolute pain because firstly, there is no clarity in terms of what price you are getting in. So I'll tell you my experience. I bought an unlisted share of a company just to experience this. So someone said, call this guy and he'll give you a quote. First of all, he didn't take my call and he returned my call 1 day later. And I was like, boss, I want to buy shares of this company. What is the price? I knew what price my friend had paid. This guy quoted 15% higher. I was like, okay, fine, it's okay. How long will this process take? And he said, within 2 days, we'll do settlement. Transfer your money and all that stuff. So I did all that. Took 2 weeks to settle my, trade and get those shares. And every day the price was fluctuating, 15, 20% here and there. There was no clarity. And for those 2 weeks, right, I had no clue where my money has gone. So a lot of, opaque points in that transaction, especially when you look at that transaction from how easy and how transparent buying listed shares are, right? So I'm not a fan of unlisted shares, but a lot of people do end up buying. But SEBI has put a warning note to investors saying that please don't get involved in this. So that's something you should. But yeah, end of the day, it's not a very clean practice in India. I wouldn't recommend unlisted shares. Yeah.
I've always been baffled knowing that whatever is happening in the world is affecting me in terms of where I've saved or invested, etc. Is that important to be looked into, or how does one even start to understand how world events kind of affect us at all?
Yeah, so the thing is, we are no longer an isolated economy, right? Tomorrow, our lives, financial lives are also dependent on what and how, Trump is feeling. How, how the man in North Korea, King, how he is feeling, right? So we are not an isolated economy anymore, and our portfolios fluctuate basis how these people feel that day. So, but that's always been the case, right? Today it could be in this era, in this phase, it could be these guys. A few months ago it was someone else, right? Come next February, it will all depend on how our finance minister is feeling, right? So it's a never-ending process. But yeah, that's the sad reality. That's the not sad. That's the reality of interconnected economies. Yeah.
Are you using AI in any way to manage your personal finances, or have you seen creative ways in which people are using, say, some platforms to manage their personal finances?
Yeah, I've not used AI for personal finance management because that would be a shame. Uh, but I know you can use AI. I know people who've used AI to give them templates to help them manage if they've got a lump sum, and you can just key in saying that this is my how much risk I'm willing to take. Translates to a number percentage, and you can ask AI to give you a template of investment. Now, whether you have conviction to make investments based on that is a different thing, but there is no harm doing. But I'm using AI to check my blood reports. Yeah, and I think it's doing and I'm also cross-checking with what the doctor says, and I think it's pretty interesting, right? Yeah.
So I just wanted also your thoughts on equity-linked savings scheme. Is it underrated in comparison to normal banking savings account?
Yeah, so equity-linked savings is a very interesting product because it is an equity product which comes with the risk profile of a debt product, and it's taxed as an equity product. So it has all those advantages. That's a very good instrument if you are looking for a proxy for FDs. So yeah, but that's what I just said as a financial advice. So please don't consult an expert before you act on it. Yeah.
Is there anything else you'd like to end the session with?
I think if there's one thing that I want people to take away from this is my emphasis on those building blocks of personal finance. Please trust me when I say this. Most people in India do not start their personal finance journey simply assuming that it's a very complicated thing, that somehow have these preconceived notions that it's rocket science and it's super complicated, and they keep deferring it. But end of the day, it's a very simple affair. You just need few simple building blocks to act upon, which I mentioned, say emergency fund, insurance, and your attitude towards debt, and then start thinking about wealth creation also. Just by doing these things, you would be way ahead compared to many Indians. You would be surprised to know by how much. So, but yeah, that's my key takeaway for you all. If you can start thinking on those lines, for those of you who've not started your personal finance journey. Yeah, that's about it.
Thanks so much, Karthik. I think we discussed a lot, that this could be a 4-hour, 6-hour long conversation. We managed to fit in a lot, including your personal journey, as well as the building blocks of how to start in our financial journeys, plus a lot of myth busting that you did. So thanks a lot.